Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back for another week in my episode. Well, this week got a bit more excitement in the Dow Jones or the US stock market. It's initial on Friday. I think it's down it's only slow a little bit, but it makes a new high on Monday. But then it created a pivotal point, and it's quite staggering to actually look at it. We thought it's just going to be, another new high, keep on making new highs, just like the last couple of months or month at least, so to speak. But then it actually didn't do that. It got as high as like 30, I think around just above 35,000. So it's quite good. But then the day actually itself is finished less than that, is like minus 35 points. So something's pushing back down on that. So it looks like a pivotal point, like the rod I call them, and that's on Monday. And then Tuesday, people worry a bit more about inflation, which we talked about it ages ago. And even Janet Yellen were talking about it last week or so. And a bit of hiccup, and suddenly that message seemed to come back to play on Tuesday, and it's minus 470 points or something. So just below 500 points or something. Then on Wednesday, the big time comes. The CPI's value comes out, and it's more I think 4.2% or anything more. It's more than 4% anyway. And Dow Jones went down to like 681 points. And then, just a bit like back in March last year, the Dow Jones suddenly just responded back on the next day on Thursday, got back up 430 odd points, and then Friday as well, up another 360 points something. So it's like go back up like 700, 800 points and wipe up some of those falls. But still end the week, I think a couple of hundred points down or something. But then the thing is this signal just remind me again of this large gap up, large gap down kind of thing, just going up and down all the time. That it's just, again, the market is telling us that it's trying to find a direction. It just don't know where to go, and that is always either I said it before, say it again, is a signal before either top or bottom is formed. So some sort of reversal might be happening. And then secondly, you got this pivotal point on Monday. Basically, maybe it's a round number theme again, try to push above 35,000 for the first time for Dow Jones Industries. It might be a bit too much for the time being, with the COVID-19 is running around, and general economy is still trying to recover, and it's maybe too much for the stock to handle, stock exchange to handle. But then this fast fluctuation, this volatility is basically telling us the market is trying to find its place. And the CPI inflation number about 4%. Well, we sort of know it's going to be above 2, maybe 3%, but 4 a bit, 4.2 overall. It's a bit more, but I think it'll be next couple of months will be like that as well, because remember, this compared to last year, when during the pandemic, obviously everything stopped, and because the pandemic spread around the world, some countries still in real lockdown, some places, in Asia especially, try to come back out again, and the market, the economy is trying to slowly, start working. But a lot of, like in India and the Western world, and as well as Brazil, kind of things, is still, a lot of problems. And obviously the vaccination hasn't actually been going around the world yet. Most of the big developed countries like US, Canada, and UK, and so on and so forth, hold, and I think Europe as well, hold on to a lot of the vaccines and not share to the world, like the likes of the African countries or Zimbabwe, or even not share enough to Brazil, kind of thing. So with the COVID-19 still running around, it's kind of difficult to see the stock market, the Main Street recover quickly. But the stock market seems to have gone way too fast this time, which I've said before, without much fundamental. It's just this basic big pink elephant. It really depends on when people start looking at it. I think this CPI number basically people back to the drawing board, so to speak, which rather than just talk and chit chat about it, say there's inflation coming and people can deny it until the actual figure comes out. When it comes out on Wednesday, obviously it's quite shocking. It's not just a normal 2 maybe 3%, which is similar to what the US Feds try to target for, but it's way above its 4%. And then you see obviously the stock market go down, and gold reacted to that as well, and gone down quite a bit, and I think gone from around 1830 at the start of the week, gone down to like 1810, and I think Thursday went down to lower than that, a little bit lower. I think about 1805 or something around that area, but 1800, 1790, 1800 still hold, as I said before. So long that it's not broken, I think there's the gold still got way to go yet to got good support. I remember gold spent a long time below 1800, so it's only fair that it uses 1800 now as a floor. And then on Friday, obviously Thursday and Friday, gold recovers back to like 1820, 1830 areas, and then now I think Friday is back up to 1845 or something end of the week. So it's actually quite a bit of movement, but again it's still around 50 or $40 in this case. 1800 go back up to like 1840 something. So it's just hobble around. But also show one thing that the inflation number comes in. The U.S. dollar index actually gone back up from just below 90. It actually broke 90, I think, during the week, to 89.9 or something, and then suddenly shoot back up to I think on Wednesday up to 90.75 or 90.80, that kind of thing, and then Thursday and Friday just come back down again. So now hovering around 90.5, 90.6 area. So even then, with the sudden, obviously the increase in the US dollar index, gold ain't actually gone down that much. So basically, it's really telling us that there is something going on. That gold underneath the gold price, there's a lot of support at the bottom around the 1800 area, but to the top to 1850 seems it's quite difficult things to break at the moment. It tried the whole week more or less, tried it a bit, but it didn't happen. A couple weeks ago couldn't break through, or last week couldn't break through that either. So I think that is got to be another ceiling for it. But also the above that is like the 1960 or 1920 that area, which was the high that made back in 2011, 2012 area. But then the highest is 2070, which was early in the year. Also I think late last year or something. So I think there's a couple of ceilings, difficulties to break above those kind of level. But I think if gold continue like this, there's going to be quite still got a bit of strength on it. But also I think overall it's also showing that the market could be quite jittery at the moment. And obviously there is the war going on. I call it a war between the Israeli and Palestinians sending rockets to each other. And then I think that is definitely support gold a bit going forward. So we just have to wait and see how bad situation is between Israelis and Palestinians. I just hope that they stop fighting, to sit down and talk, and rather than shedding blood. It's not good for anyone. At the end of the day, when the blood is spilled, it's always red. Doesn't matter which religion you're from, or which color of your skin, or what sex you're on, or sexual orientation. It's always blood. When blood is spilled, it's never good, because you just carry a lot of bad blood. But for the stock market, it seems to support the gold price a bit, because also US dollar index as well, because in the time of turbulence, so to speak, things just go straight. People just go straight to US dollars for the time being. So that's what's happened last week. But also the other big news of last week is Bitcoin, obviously. Tesla, I think a couple of months ago said Elon Musk tweeted and said, it will take Bitcoin as payment for Tesla car or something, and only in America, and then I expect it to allow this to happen around the world. And then 2 months later, he's backtracked, now saying Tesla no longer take Bitcoin for payment for his car. because the Bitcoin, the way you're mining Bitcoin uses a lot of electricity, and most electricity is generated, using coal-fire, which is bad for the economy or bad for the environment, those kind of things. So it's just whatever Elon Musk say, but you just see how fluctuating Bitcoin is. I think it's gone down like 10,000 points and gone below 50,000, and then try to go back up a bit again. So it's very, very volatile as well, and to me, basically, I think it's very much manipulated, just by somebody's choice. A bit, Elon Musk sort of stepped in the shoes of Donald Trump. Donald Trump is tweeting about politics in America. Elon Musk tweets about Tesla and Bitcoin, mainly. And I think it's also talk about Dogecoin or something. He says I'm not very good, or some silly comment, and Dogecoin actually gone down 10% on after his comment. So his tweet seems to carry a lot of weight. Either you like the way he do things or not. You like Elon Musk or Tesla or SpaceX. It's really up to you. But he seems to be on Twitter quite a bit and make quite a bit stir, so to speak, on the stock market when he speaks. But the other thing, I think quietly also in the background, early in the year and late last year, everybody talked about Cathie Wood, ARK. ETF and so forth, but it's sort of linked to Tesla fortune. When Tesla went up like 700% or something huge last year, Cathie Wood's ARK ETF seems to also have gone through the roof, so to speak. But this year, when the technology industry is sort of gone sideways, leading by Tesla and Apple and like, ARK ETF seems to also have topped and basically gone down sideways. I think ARK still got a bit of way to go. I mean, remember, I think a couple of a month or so ago, I talked about there's talk in Asia of ARK, how it's been so open and let everybody to look at his book, and they already commented some of the shares that's on his book is not very liquid. So and ARK also own a lot of them, more than 10% or around 20%. So they try to get out for a very illiquid company. They basically create a market when they go up. So they become wealthy, but they go down. They can also cause the price to crash, and it's not easy for anybody to get out in a sort of like a very tightly managed, very illiquid market. So I think overall, Cathie Wood's ARK is. The talks in Asia is that people in America as well as in Asia is watching ARK ETF, and basically there's some big funds waiting in the wing try to short the hell out of it. I think they already started and they make quite a bit of money this year, and I think it's continuing, especially those ones that have very illiquid market. So when Cathie Wood's ARK ETF face a lot more downturn, then people will try to get out of it. The only way to do so for them is Cathie obviously have to liquidate holding, raise more money, and then and basically pay back to investor. But as that happens, they try to sell shares on some of this illiquid market, and it will cause more problems, and then the ETF price gone down a bit more even further. So personally, I think this year is not really a year for technology shares, and Cathie Wood maybe god last year, the goddess, but this year is going to be the garden variety type of funds manager who is not even able to beat S&P 500 or Nasdaq or whatever measure you have. So I think this year she might still have some further view, but I think the performance of that ETF is not going well. But overall, this year for me anyway, personally, I think the big thing for me anyway is gold and US dollar. Basically, I think it's all this extra money that's printed because pandemic, and then obviously President Joe Biden promised another 2.5 trillions for infrastructure bills and stuff. Just gonna make US dollar even more weaker. Remember, if you look at the US Fed's balance sheets, I think back in 2008, 2007, when the last subprime market happened, we were up to like 2.5, 3 trillion in public debt in America, and then obviously had this big long bull run from 2009 up to 20. 2020 kind of thing, just before the pandemic, like a 12-year expansion, and then the Fed's balance sheet gone up to around 4.5. It tried to rein in a bit, go below like 3.6 trillion, but the stock market tanked, and then Donald Trump stopped it. But it was hovering around 4.5 area when President Joe Biden came in to the picture. And now look at the Fed's balance sheet. Is what it's about 7.5 trillions, and it's still increasing. And obviously, I think it's going to increase some more if the President Joe Biden's that 2.3 trillion worth of infrastructure proposal actually became fruition and then gone through what you call the parliament in America and then become law. I think there will be even more negative for US dollar, but I think that is something to come later on to see how things are. But the other thing definitely I said earlier at the start is basically the inflation. People think it's not there now, it's staring in the face. People can argue all about it. I personally think that the inflation is going to be stay around, quite a high number. It'll be more than 2%, 2-3%. This is one reason why, or the main reason to me anyway. Federal Reserve, Jerome Powell basically said it won't increase interest rate until inflation is much further than 2%. He knows that's coming. That's why he prepared people, the market, couple of months ago. And also, I think last week when Janet Yellen's talking about maybe an increase of interest rate and then back down kind of thing. I think again that is exactly what I said last week, is testing the water. So inflation is coming and there is pressure, and the Feds they might also use Janet Yellen to test the water to see to tell the market there is a chance for interest rate increase. And that's what I said before, stagflation is coming, which basically is you got high unemployment, high inflation, but economy is still in a doghouse, not being productive, and so become a stagflation because you basically the country basically is not producing as much. I think stagflation is not just a US thing, probably in Europe and Western world, and then the Eastern world, because the economy picked back up again, and the pandemic didn't hit it as hard because it has experience of how to handle like SARS and MERS and things like that before years ago. They got a bit more experience, and also I think the culture thing as well, because over there Asia is they listen to the government, they do what they're told. In Europe and America, it's more like my rights to freedom to choose whatever I want, and that's causes differences. And I'm not saying which system is right or wrong, but at the end of the day is Europe is not recovering as fast than Asia, and it's not seems to be helping them either way for the stock market and the economy, and people start to get their economy back and their job back in Asia, while the America, in Europe, even in UK here is still struggling and kind of thing. So I think the inflation definitely coming, and it's going to be quite a bit of upset, I think, going forward the next couple of months. This CPI for this week coming about 4.2%. It's only a foretaste of what things might come. So as far as I'm concerned, stay with your gold, and I think if the US dollar index is going to collapse, as far as I'm concerned, US dollar will collapse a bit this year, and I think everything that rated against US dollar will go up. So I think it's happening, but not as coming yet. Probably a couple more months when the evidence coming up a bit more, people start to actually taking notice of this big pink elephant in the room, which was always there. It's just people don't want to talk about it. Now this the economy, the market, people just taking more interest of it. And therefore, I think we'll see a lot more volatility in the stock market. So temporarily, it might pull down gold and silver as well. But I think gold and silver, because it's a good bet, hedge against inflation, it will recover very quickly, and I believe, because simply inflation is going to be much higher than what we all thought about, and it will just shoot up quite quickly. So gold will just go up, so will silver. But for the time being, I think just watch out. I think this is just a little foreplay, so to speak. A lot more to come in the next 3 months, 6 months, I don't know, but I think there's a lot more coming through. So just hang on to your hat and be careful. And whoever's investing in gold or trading gold like myself, just hold your hat. Do not get get scared. I mean, so long as around 1790, 1800 still holds, even down a little bit as far as I'm concerned, because what the inflation is coming over. I think there is fundamental case to continue hold your gold, but as well as trend following, the prices just continue to go up. However you measure it, this is how I think, and my analysis seems to come to fruition now. I think there's a lot more to go, so do not just let go of your gold, just have a look. But I think crude oil and foreign exchange, all those are also some area to look at, but I think that might be a shock when people realize a bit more that the CPI is not one-off event, the 4%, and it's continued a couple of months later on, still like 4 or 5%, or thereabout. People then start to realize inflation is coming, especially if there's some surprises, say it come down next month or two, come down 6% in CPIs, and everybody panic, and people jump out from the stock market and going back into US dollars. So US dollar index will basically shoot up, maybe after 92, back up there again, 93. Who knows? Then the gold will probably get a hit. But then, because I say the inflation is still coming in, people just jump back to gold to hedge against inflation. And I think later in the year, definitely gold will continue to go up. So just wait and see. But that's my analysis anyway. But from a trend following point of view, you just have to watch the price. The price seems to support what I'm saying at the moment. So hold tight, keep your hat on gold and see how it goes. But don't forget about crude oil. Don't forget about the foreign exchange, any foreign exchange against US dollars, or anything like commodities against US dollar kind of thing. So that is basically it for this week. And next is my update on my portfolio coming up. Okay, let's make a start. First off the bat is Apple. Short term is a sell, medium term is neutral, long term is a buy. Same as last week, more or less. Amazon, and its next. Short term is a sell, medium neutral, long term is also neutral. Now, obviously, this fluctuation last week with the US stock market that basically make even long term for Amazon is going to neutral now. Next is Australian dollar against US dollar. Short term is a buy, medium is neutral, long term is buy. No much difference from last week. Generally, the US dollar against Australian dollar, I think it's around still the 77.78 mark, that kind of thing. So just hopping around until there's a real breakdown of US dollar index. I think it's probably going to sideways a bit more on Australian dollar against US dollar. Next is Brent crude. Short term is a buy, medium term is neutral, long term is a buy. Same thing for WTI crude oil. Short term is a buy, medium term is neutral, long term is a buy. So it's going down a bit of sideways, but still making headway, so to speak. So don't keep make sure to keep your eyes on it. Don't forget about this too. Okay. Next is DAX. Short term is a buy, mid term is neutral, long term is also a buy. So not much change from last week. Next is Dow Jones. Short term is still a buy, mid term is neutral, long term is a buy. So this week though, there's quite a bit of fluctuation from last week of just all buys. So this week is the medium term is turned to neutral, so to speak. So overall, I think the pivotal point, which I talked about earlier, is something that I definitely need to be aware of, because it could be an indicator, but obviously also the big volatile up and down when the CPI's number comes through. Even before then, the market in general, I think last week we were talking about worry about the inflation number can be quite unexpectedly higher. And obviously early in the week as well have that, and obviously Wednesday come back. But the big thing is the extra the CPI at 4.2 or 4% is known. Then it seems to make a comeback. So we just have to wait and see. But the volatility of up and down, with big gap and so forth is one of the signs of a turning market. So watch out for Dow Jones at the moment. Next is FTSE. Short term is a sell, change from buy last week. Medium long term still buy. So it could be a bit of a following Dow Jones volatility here on FTSE. We just have to wait and see. Gold first. First of all, short term is a buy, medium is neutral, long term is still short term is a buy, medium term is a buy, long term is neutral. So the recent gold basically come back. I think over the week it's gone down to like 80.05 around the area. So still 1800 still holding up, and then they move back up to I think end Friday with 1845. So rather than a $50 mark, it's just within this $40 ranges. So keep an eye on gold. I think there's a lot more to go yet. Next is Hang Seng Index. Short term is a sell, medium term is neutral, long term is also neutral. So this one is basically a bit. It's a bit like Nikkei. It seems to have gone down before or it's not really following the U.S. stock market going higher and higher, that kind of thing. So probably because of due to the mainland China shares. And index are quite localized now. Means Shanghai, and internal in China, the index quite volatile. I think it's gone down quite a bit in China. So Hang Seng basically with a lot of it constitution. All those shares that make up the index is very much making money from the mainland China. So that's all reflected on the Hang Seng Index. So short-term basis is a sell at the moment. So just have to wait and see. Back to Nasdaq. Short term is a sell, medium and long term is also neutral. So last week volatility hasn't done much to it still. It's a short term still sell at the moment. But I think Nasdaq out of the all three big US index, Nasdaq is the one that's been lagging. That's why I talk about the ARK ETF. Basically, it sort of showed this year it's not making as good a hideaway as last year. Next is Nikkei. Short term is a sell, medium is now also a sell, and long term is neutral. So I think last time, like I said already, Nikkei seems to be the leading indicator of what U.S. Stock market is going to do, and now Nikkei seems to have turned. It could be another signal for the U.S. market maybe have just topped, but we don't know. Just have to wait and see. Okay, the more signal we got, the better. Next is silver. Short term is a buy, medium is neutral, long term is a buy. So very much following gold. But out of gold, between gold and silver, I think silver got a better chart at the moment because it's basically above 50 days 20-day moving average. Gold is still trying to go above the 50 days moving average. It's around the 1855, those areas. So yeah, that's why also the downward trend on the gold is around the 1855. So I think this is why a bit of struggle at the moment, but I think gold overall will break through, but just have to wait and see. Next is US dollar against Chinese yuan. Short term is a buy, medium term is a sell, long term is a sell. So this one basically is it fluctuates a little bit. US dollar index obviously recovered a bit. So short term is changed from sell to last week to buy this week, but medium and long term still a sell. So I think that the overall view is still intact. I mean, if my theory is correct, US dollar do later on, hopefully, if it does show weakness, there will be strength in all Asian currencies. I think Chinese dollar, Chinese yuan will be the leading one on there, so keep an eye on it. Next is US dollar against Japanese yen. Short term is a buy, medium term is neutral, long term is now changed to buy as well. So the US dollar index recovered a bit on Thursday and Friday. That's like pulled the US dollar against Japanese yen going up, and I think back to 109.50, that area. But we just wait and see how things are. Next is British pound against Japanese yen. Buy across the board. Short term, medium term, long term is also a buy. Next is British pound against US dollar. Short term is a buy, medium is neutral, long term is a buy. So British pound seems to be quite strong in moments. Continue from a couple of weeks ago, but we just have to wait and see how things go. Next is Bitcoin. Short term is a sell, medium term is neutral, long term is now also neutral. Like I said before, Bitcoin seems to be quite volatile recently. Up 3,000-4,000, down 3,000-4,000, and obviously this week didn't help with Elon Musk suddenly say Tesla no longer take Bitcoin as a way of payment. This is quite, I don't know, is it market manipulation or not? Elon Musk said February sometime, say I have purchased Bitcoin, but I think that Elon Musk bought Bitcoin through Tesla in January or something, and then they tell the world they bought this amount. Maybe have to disclose in this share requirement to regulate or something. But it seems to be now he basically suddenly just say I'm no longer allow Tesla. I mean, people buy Tesla car including Bitcoin. And again, I just wonder, is it because He's naturally believing that Tesla is should be a greener company, and therefore linking it with buying a Tesla car with Bitcoin, which is energy taking a lot of energy. Is a good thing or not, or is it something else he playing behind the scenes? So because he sort of his tricks caused Bitcoin to go up, and now his tricks again caused the Bitcoin go down, and also Dogecoin. And I think he's maybe manipulating things, but just watch out what his Twitter says. Okay. Next is iShares 20 TLT ETF. Short term is a sell, medium term is neutral, long term is also a sell. So this week sort of gone down a little, slightly different from last week. And I suppose it's people jump back into the bond, so to speak, because we have the sudden scare of the stock market, worry about inflation. So it's actually gone down, but I think overall, this is my conspiracy theory, which I talked about before. The maybe American government or somehow in America they try to engineer this scare, and then when people really scared, just like back in last year in March, when everybody worried about the pandemic, U.S. dollar index was really going very high, and the bonds market price was really down. Well, really high. So it's the yield is very low, and then obviously TLT gone down a bit as well. So just have to wait and see how things go on that one. It's a bit strange. Just watch out. Next is Tesla. Short term is a sell, medium long term is neutral. So Tesla this year is just not making as much headway as last year. Not using Bitcoin doesn't help either, so we just continue to sell more short term. Next is Australian index XJO. Short term is a sell, medium term is neutral, long term is a buy. So a bit different from last couple of weeks when it's like buy across the board. So the spat between Australia and China this doesn't help at the moment. Last but not least is Alibaba. Short term is still a sell, medium is neutral, long term is also a sell. Even though no matter how much I think and would like Alibaba or think how good it is, but I think the stock market in general thinking Alibaba is overpriced, and it's just shorting it because it doesn't see the bottom. And obviously, China regulators may be using Alibaba as like a showcase to say you. Out of line, say things that doesn't meet the Chinese government view or something, or you moan about it or try to complain, then you get stepped on like a bit like ants, and then just try to make all the other company to be more in line. It could well be that's the case, but I personally feel Alibaba, because of its strength and reach within China, is still a big long-term play as far as I'm concerned. But the market is doing at the moment. Is taking a different view. So from a trend following point of view is don't be biased with everything. Just trade whatever the price the market's telling you the price and moment is going down. So short Alibaba. Even though I very much like the fundamental, but the stock markets basically say something else. So as a trend follower, remember you follow your trade, follow your system, follow the share price basically. If the market tells you the share price, it doesn't agree with the share price, doesn't agree with what you think, then follow what the market is telling you. Our views, our emotion, our biases doesn't come into it, because at the end of the day we're trading against a price. We just set by the market, and we're not here to be right or wrong. We're just here to follow our system, and in doing so, we should make money out of it. We're not here to be right or wrong, so remember that when you are trading. Okay, that is the update for this week, and I speak to you next week. Remember, don't lose the trade on Go. Just concentrate on it. I think there's a lot more legs to go yet, so watch your space. Bye for now, and happy trading. Be safe. Bye.